off. So nothing here is going to be an offer or a solicitation of an offer to buy or subscribe any securities. That offer will be made through a disclosure memorandum, which will be made available to every investor when they log into the Energy Funders platform. All of that stuff will be there to review. Note that oil and gas investments, these have significant risks. They may lose value. They're not insured and they're not guaranteed. And these investments are intended for accredited investors only who are familiar and willing to accept the risk. So the information we're going to present today reflects good faith belief or expectations, but there are no guarantees. All right. EFBC 34 LP Energy Funders, including all the potential affiliated subsidiaries and parents and entities. We don't make any investment recommendations or guarantees, and this should be construed as nothing more than a presentation, and you can do your own due diligence on the platform.
Once you cross into the Hager, you see that you had continued thinning in the Viola and the Sylvan, the Hunting completely gone, for about 140 feet of missing section of from the Woodford, which is the post-Hunting orogeny, down to the top of the first Wilcox sand. That is our documentation of the Paleo Fault. What's interesting, people ask, will that be sealed? And what I can assure you, with 250 feet of missing section in the Hunting at the time of the start of the deposition of the Woodford that came across the whole area, that fault had been at the surface. Calcite has filled all these faults, and from 1.5 billion years ago, the Ordovician, that fault's been sealed. So we don't find in this area, I have yet to ever find a fault that doesn't have a trap on it and has been sealed. So that is the initial trapping in this fault block. The next two well cross section just shows that as you extend to the southeast on that Paleo Fault, it continues on and documents the continued paleo thinning that you see in to the northwest. And this is simply a cross-section that documents, number one, the Sanders oil-water contact was what we anticipated. It is the same oil-water contact seen throughout all the 165 million barrel oil field of the Bow Lakes. The unusual well is to see that there's a lower water contact in the Hager, and of course that's because of the separation of the Paleo Fault. The proposed location, you can see that using the E-log to the Woodford above, and then the E-log of the anticipated interval in the Paleo Fault from the Hager generates the perfect E-log. We call it an animated log for the drill site. That's exactly what I think our drill site E-log will look like, the thinning that is anticipated on the upside, and puts the full Wilcox section of 35-40 feet of high porosity quality sand out of water. With that said, that's a major reserve spot. This seismic line is, if you look on the, you have to look back on one of the maps, it's an old 2D line. The importance of it more than anything is if you look just above the Wilcox Viola green area that we've marked on there, that the reflector above it is gone over the structure. What that really is saying is that whole fault block further is confirmed by this seismic line. Even though it's off structure from our prospect, it confirms the whole fault block is a paleo structure, meaning the whole block was high, and of course what we plan to drill is the highest part of that old paleo fault block. It also shows some shallow zones, and in the Cromwell, I see a little doublet above the prospect, off structure. We will gain structure above that. I have completed wells, as you'll see to the west, where I'm going to pay $1 million a day, 330 PSI flow tubing pressure. That well actually made about a BCF, and there's nothing completed in the Cromwell around here, so I think we'll have a really sweet BCF up hole and probably 20,000 barrels in that Cromwell zone.
So in quantifying what we would expect out of this location, basically it was just putting together a type curve representative of wells in the area producing from the Wilcox. You can see it's about a dozen or so locations, and we had logs on, I think, about 8 or 9 of them. Basically, just if you took the production profiles from each well and normalized them back to a ×0, you get this curve here on the right, the green production being the average production by month for each well, all summed together and normalized. And then the curve running through it is sort of the match on that to kind of get to the reserve picture. So the average well out here is about a 55,000 barrel recovery. And so the curve running through this normalized curve here is about a 55,000 barrel EUR. And what we did is also doing the volumetrics to kind of confirm some of the reserve size we're seeing at the prospect location, is doing a comparison of decline curve EURs versus volumetric EURs. And what that did for us is kind of help solidify what recovery factors we're seeing in this local area for the Wilcox, as well as the drainage areas for each of these locations. So with a 40-acre sort of a general blanket assumption and a 20% recovery factor, we had some pretty good matches on EURs with the volumetrics versus the decline profile seen in each well. And some of the trends you see here across the bottom, initial rate versus EUR, feet of pay versus EUR, and then got the decline EUR versus the volumetric EUR. We're using some of these to sort of scale to the prospect area that we have.
And I think this is a very important point. What happens in here, these things are drilled on larger spacing units. We will go most likely, the Oklahoma State vertical allowable for wells at this depth is around 185 to 200 barrels of oil per day. You don't want to pull them too much hard because that gives you the longevity in production. But what will actually happen is we will probably drill a 20-acre increased density full allowable as allowed by the Oklahoma Corporation Commission development well on these tracks. That will probably generate every bit of the income that these well, staying up dip and on an increased density, will give us development drilling that probably will equal these numbers.
So the volumetrics for the new Lima prospect is the box here up on the right. You can see using that 40-acre spacing, which is roughly very close to the area that actually sits above the Hager well. 25 feet of net pay is what we expect to see develop as we move up dip, and the 20-acre recovery factor is how we get to that 177,000 barrel recovery. And using the IP versus EUR trend on the previous slide, that's showing for those reserves, we should expect about 120 barrel a day IP on this well, which is, might call it a one-day IP versus a 30-day IP. And with that, you get the profile from the normalized type curve, and that's also getting to the same reserves, 177,000 barrels. The AFE, you can see here on the left, is detailed for the new Lima, $574,000 drilled and completed. And then the economics for this location alone, and we've already been through the numbers on the summary slide, but again, it's 564% rate of return for the 175,000 barrel economic limit recovery. And then there's your AFE with some small acreage costs built into it. And then lastly, just a picture of the surface setup out here. Like Mick described, there's some disposal facilities just offsetting where this new location is going to be. and should allow us for a quick and easy tie-in to handle water production. Okay, unless there's any questions on the New Lima, I'm going to move on to the Roberts.
Hold on real quick. Any questions on New Lima?
Just real quick, what kind of disposal cost are you looking at for this area? If you do have to dispose
Well,
of water.
if you truck it, it'd be about $1.60. I think we can probably get rid of it for somewhere around 30 cents a barrel with those guys. Certainly 50 cents a barrel.
Right. Do you have a relationship with them? I mean, have you done water disposal with these guys before? They easy to work with? Well,
a new team has bought those wells, and I'm not as familiar with them, but I do know that they're already taking a third-party trucked-in water to dispose of water around the area at under 50 cents. So I see no reason they wouldn't let us tie into the line, and it's just cheaper for them and everybody else.
Okay, good.
Hey guys, the reserve number.
By the way, that well, I drilled it with it's an Arbuckle disposal. It's capable of about 40,000 barrels of water disposal per day. So there's really no limit to getting rid of water there.
Guys, this is Craig Davis again. I have a question for you regarding the Hager well. So you showed a chart where the average recovery for these wells was around 50,000 barrels or so. And because of the Hager well, you're seeing potential for 155,000, 170,000 barrels. Can you show us a detailed 5-inch log of that contact that you're seeing in the Hager well?
Let's see, I don't have it on. Go back. Let's go back to that cross section. Oh, I don't have the. I can take a quick shot and email it. We don't have the resistivity tool there.
Got it. Okay.
But I can send that down. Just I've got it on a big sheet right here, but I'd have to scan it real quick and get it off to you.
Yeah, that'd be great. Thank you.
Yeah, I'll do that.
All right, we're going to move into the Roberts. So the Roberts prospect sits over in Hughes County. It's another shallow prospect. This one has the benefit of the 3D survey over it. And we're looking at the primary target, which is the development target, 24,000 barrels in the Viola. With that well coming in and the down dip Elmer producing from it, that's going to open up the entire prospect along that fault of about 223,000 barrels, which would be basically a development program which would follow this well. AFE for the Viola is $586,000, and that's going to also allow us to take it down to the first Wilcox and test it for commerciality, which if that does prove out, we'll show you our expectations for that zone as well. The Elmer well is kind of the key here. It's the well that proved the structural feature against up in the Viola, and it came on making 360 barrels a day from the Viola, and with the mapping and the log that was run, it has an incredible seismic accuracy. So we feel confident about how Mick mapped this particular target. So I'm going to have Mick go through some of the geology here, but just real quick, this is the outline of that North Tower 3D. It's a 22 square mile 3D. And it's kind of set up the prospect here, the Roberts, and south of that location is the Elmer that was drilled back in 2016.
We talked about the small regional map. The 3D blow up is precisely where we shot our 3D through the area. Now, what's interesting, the Discovery well and the Roberts and the Viola was down there, like I say, in excess of 6 or 7 mils lower than what the Roberts should be encountered. And what happened there, there was some old drill sim tests that had recovered some oil back in the 50s. And the operator, I sold the prospect to an operator out of Denver. I wanted to drill the Roberts location originally, always did, because the rule is, as they say, be high on the structure to encounter the Wilcox. They wanted to be close to the drill sim test shows, and we drilled that little bubble down there, establishing a good Viola well. The Hatchard area is the water contact associated with the Viola. The Wilcox will be smaller, but the size of that little structure implies it's about a 2 million barrel recovery. Now, one thing we do, and this is an interesting point, although we're only selling at this point the initial drill site, we always sell any geologically offset to the same partner. So assuming we make a discovery, there's probably 2 offsets in the Wilcox and multiple offsets in the Viola that will come down the line, if that makes sense.
It does.
So as you blow up this little area, what's really quite interesting, and I initially, with a company called Vanguard, shot the pilot area like 15 years ago. On that, the vintage seismic, we were unable to see amplitude anomalies as we are on the 3D shoot to the north. And we also shot the North Tower later shoot with a group that was primarily interested in horizontal drilling. They did not quite come down, and they had permitted the shoot, and we'd made a deal late into their permitting. And to they were unable to, by the time we got the crew in there, get the 2 seismic lines totally merged. But I have a 2D line across that little 2 million barrel field that's kind of in between, and that's really what instigated us being able to shoot the 3D out here, is because we shot that at a perfect 90 degree to the structure. We saw a amplitude anomaly on that, and that's what then made us realize that we could process this new data in a manner in which we could see the amplitude anomalies that we see on this shoot. Let's go to some of the cross-section lines. As you can see, reserves up and down here for a structure, they go from 9 million, 21 million, 3 million, 2 million. The smallest producing structure are the 2 wells to the west. It's on the downside of the fault, but it's still a paleo structure off an echelon faulting of the major fault. It made 659,000 barrels. To be quite honest, the size of our structure is somewhere between the 700,000 and the 2 million barrel size. So there will be development off this once we make a discovery in the Wilcox. This next map series shows potential offsets in the Viola, but I think more importantly, and you may want to blow this up a little bit, look at the seismic line directly south of the map. Yeah, zoom in on that a little bit. The structure that we drilled the Elmer on, and you can see the amplitude anomaly across the structure, the Wilcox oil field that made 21 million barrels. You see a significant flattening and doublet on that structure, and you see something very similar where we made the discovery in the discovery of the Elmer well. As you look on the north east-west line, which is over the prospect, right down here. It runs east-west. Show them where that runs. Right there. Okay, blow that up. You can see a kind of a double contact, in my opinion. The one to the east, shot points to the east has a break, and then when you come to the actual Roberts structure, you can see another flat line. That, in my opinion, is the oil water contact on the Roberts in the Wilcox showing up even stronger than to the east, where you have Viola extending further. The north-south line, which is just to the east of the map, what you basically see where's your point? There you go. The Elmer was here. You're already into the doublet scenario. And again, I think what you're seeing is a breakout of that data that shows most all this being productive out of the Wilcox. The thing about it, it looks like we've got a flank location at this point to the best part of the structure. But what we will do on this, let's go over to the map and see the triangle we're going to drill. If you look closely, the light colored lines, I haven't even drawn the contour to show that last contour that's on the seismic. The point that is that you've got east-northeast dip. We will let this well, once it gets into this section right here, begin to drift to the east, and it will climb section without having to pay for downhole tools. This country is really good about letting wells, rotary bits climb dip, and once you get into that dip, we'll let it move into the higher part of the structure a little bit. That's the basics of what we're looking for there, and we're up dip on the whole project to the Elmer discovery.
This again just kind of shows running east-west across the whole chute. You've got that old oil field on the west side and all the production coming out of the Viola first Wilcox sand, and then how it extends all the way over to where the Roberts location would be projected in on this additional structure.
Seismic blow up to the north is actually what will be one of our next prospects, just showing that at this point, we don't see it under the Roberts, which is here, but as we move across the north end of this old oil field, we got an amplitude in the second Wilcox that's never been tested. Wells only went to here, so that'll be a follow-up prospect y'all will see one day.
So putting the numbers to this prospect for the...
Excuse me?
Quick question. You've referred several times to amplitudes. Have you attempted any AVO analysis or anything else that might give you a more direct indication of hydrocarbons?
We've done a little, but the processing on this line, on this data set was done a few years ago, 3 years ago actually, and they hadn't done that. We've done a little bit, but we have not processed the whole thing, and I don't have that in hand right now. We've done a little bit of playing with it on the. I've got to go to Houston to do that. My geophysicist is down there, and we think we could do a whole lot more with this data set these days than what we did 3 years ago, but we have not done it. I think there's some enhancement that we could do. We just haven't done it.
Okay, thank you.
So putting the numbers to the Roberts prospect, you can kind of see that green outline there is all the enclosure for the Viola, the Elmer well sitting down to the south. We've assigned a 40-acre drainage area to the prospect location, and with the 2% porosity, 50 feet of pay, 12% recovery factor is how we get to the 24,000 barrels for the well. The entire prospect size, measuring about 370 acres in that closure, which is how we get to the 223,000 barrels reserves. The economic for the AFE is $586,000 for this well, and the majority, well, I should say majority, but basically the profiling for the Roberts location is a lookalike to the Elmer well. Basically took the production history from that in the first 5 months or first 5 months that we had on that well, and matched it with the decline profile, and then checked it against the volumetrics for what we would see in the Viola, and we're getting about 19,000 barrels in the Elmer well, which ties good with the volumetrics and the decline. So using that profile, we built the production forecast for the Roberts location.
Now, what's interesting about the Elmer production profile is you can see how well they started off, and that the water was in blue, and on that production profile, production in green, oil, gas was red. What happened there, again, the operator, and this was a major mistake by them. What you do not do to a Viola well that is setting on water in the Wilcox, because it's 2% porosity with fractures, and the fractures are based upon tectonic roll and dolomite. It's a dolomitic limestone. So you've got vertical fractures to the water. Well, on event number one, you can see that they opened that well up, and number two, well, they really were trying to test for a gas zone, and they just pulled the water in. You need to maintain back pressure on the Viola to hold that water back, and they would have seen a production, I think, to this point of pushing. They don't have a disposal well, so they were trucking water, and they pulled the water in and trying to test, get a gas line in free. I was screaming, don't do that. Don't open that choke up. You're going to pull the water in, and that's exactly what happened. I think the production, if they hadn't have done that, would have been at least double of what it is, if not closer to 80,000 barrels. So we feel that well has not drained the reservoir whatsoever.
Okay. Quick look at the Elmer log. You can kind of see the Viola completion interval in green, the 40-foot interval that was perforated. Then after that, we've got the Surge well, which is actually that location that sits just to the west of the Roberts location. I'll jump back to the map so you can kind of see where that is. Here's the location, here's the Surge well. And what you're seeing is, even as you're going further north there, you see a lot more development of the Viola. This one has 67 feet of perf interval in it. So sticking with the volumetrics in the production curve for the Elmer, this is what we modeled for the Roberts location for a production forecast. It's basically 300 barrels a day on a hyperbolic decline. And off to the right there, you can kind of see the detailed AFE, $586,000 for the completed well. And then again, the economics, you've got your 23,000 barrel economic limit reserves, still generating 180% rate of return with a half-year payout and 1.5 times multiple on your investment. And we ran the sensitivities again to the drilling cost versus the reserve picture and oil price versus the reserves in the well. And you can kind of see it's a little more sensitive to the economic cutoffs than the New Lima prospect, but it still seems, like you've got a lot of running room in here for things not going the way you would expect. And then I'm going to show you a couple things on, this is we've made some projections on the Wilcox sand below the Viola. So when we drill down and test it, if it were to come in, this is some of the expectations we have on what we might see. Doing all the projections from this map which is the time structure on the top Viola, we just projected it straight down about 150 feet, see what was going on in the Wilcox sand. And I'm coming up with about a 36-foot higher on structure than the Elmer well. And volumetrics, if I use that 50-acre what we're calling the probable enclosure. That gets about 35,000 barrel recovery. And if we go out to that larger, what I'm calling the possible recovery area, that adds another 100 acres in there and another additional 108,000. So total reserves for the Wilcox could be as high as 140,000 barrels additional reserves if we were to see that come in. And for that production profile, again, it's based off of localized area, first Wilcox sand producers, a normalized type curve on them, and then looking at a typical IP of about 200 barrels a day with that profile, the decline parameters from the normalized type curve gets us to that same 140,000 barrel EUR here at the bottom. And running the economics for that forecast, again, there's your reserves, your gross reserve picture, and the AFE cost with a bit of land cost in there of $600,000. You're looking at another $4.8 million net cash flow project with reserves, or sorry, rate of return just out of the park, and it's basically a 9 times multiple on the investment. And that's kind of what we have for the Roberts prospect. And I threw this slide in at the end just, you know, kind of for discussion or just kind of let you guys know how we look at things and what we can do to try to mitigate the risk. And I think if we just jump down to the bottom to keep it short, you know, let's kind of, these are a lot of the things we've applied here to help understand it and reduce the risk involved in going after these 2 locations. The analogs are very important out here, and we tried to stay within the boundaries of what we've seen done and what we've seen results for, and not try to kind of overstretch our estimates on reserves or size on anything. You know, they're finite locations, and they're not really resource plays where you expect, you know, every 10 wells to look like the next 100. And we feel like we've got the industry expert here in charge with Mick. He's been working this area his whole career and knows things that you're not going to find in any database or even log library out there. So that's all we have.
I think the next point to consider, and I think is very important in these reservoirs in the mid-continent here, is not only as important to drilling top structure wells on paleo highs for in a water drive system. The next thing that implies, and is I see a lot of people make mistakes from, is in operations of cement jobs are critical. If you don't have a cement job in Seminole County, you don't have a well. So we do a lot of things different than a lot of people that come into the area. They just try and raise cement to the highest point that because we'll have these shallow pays. You'll see us set a DV tool for shallow. When we're cementing these lower zones, we raise cement and light cement only about 500 foot above the Viola. The primary reason for that, these 20% 1 Darcy reservoirs, as well as the fractured Viola, it's an under-pressured area. So the net result is, if you try and raise cement too high, you're cementing back into the zone, into the fracture systems. And I've actually seen green cement come out of the Wilcox. So what you do is we put centralizers, we scratch it, we do a really good mud flush, and then we raise the light cement just about 500 feet above the zone, and then we follow that with let the cement set for a couple of weeks. We used used pipe or sandblasted new pipe so that we get a good bond between the pipe and the cement, and the mud flush and scratching, and gives us good contact with the formation. when we perforate through acetic acid with a water column on it. We'll tend to, you'll find that we'll actually, for the first day of swabbing, after we open up the zone, very possibly we'll actually get drilling mud out of it. People say it's impossible. I say, bull, come look at it. But the point being, and we never pressure up any acid jobs that we do above 1,200 PSI. We've never broke a cement job down by keeping our, if it doesn't just break down immediately after the acetic acid, and we're doing a small 250-gallon acid wash, we won't go above 1,250, 1,200 pounds, and the net result is sometimes we have to wash it, drop the pressure back up, down, until it will break down enough to get into the zone. If you do that, you'll never need another acid job, and I've seen wells come on at up to 900 barrels a day, which is basically natural. You don't need heavy. If you go in there with horsepower, you're just going to break your cement job down, and you don't do that. So our operations are maintained by our field man who's been with me for 30 years. He came out of Dowell as a field supervisor for the area, and he's an excellent downhole man, excellent completion guy for the area. And I think that the non-operated wells and projects we've turned have never turned out near like our own operations, because we heed the local area requirements in order to get a good cement job and leave you with a well that's intact and capable probably of being completed without any major treatment to it in the Wilcox. The Viola, we will do an acid frac, but it is maintained to go out, and once and only once we've gotten good tied to the formation. That's about what we've got to say, guys.
That's excellent. This is Casey. Real quick, money in hand, we're going to raise for 50%, obviously 55 before casing point. Your money we're money in hand. Are you guys ready to drill?
As soon as what we have to do is a forced pooling in the state of Oklahoma, and down in here you can imagine the royalty owners have been royalty owners for 50 more years or more. So it's highly broken up. Our leasing is normally about 20% of whatever units you have. The rest have to be pooled. We call them no-fines. You got 7 members of how many kids from the original time people lease these things. Now you got 50, 60, 80 people that you can't even find the descendants of most of them. But what lets us put these drill sites together is the forced pooling law in Oklahoma. Oklahoma lets us go in and file a pooling on leases that nobody can get. There are people that have lost the title, but the heirs to somebody. You name all those parties, and you name the heirs and descendants, and we're able to then put the drill site together under a pooling order that is basically a court-ordered title opinion at that point in time. And the result is that's how we clean title to all these really very messy lease scenarios. But once you've done that, you've got a clean title out of the state of Oklahoma under a pooling law. That takes about 60 days. So from the time money is raised, we will have already started the pooling, and I'd anticipate basically a December, early January spud based upon completing our forced pooling.
Excellent. And that's plenty of time for investors to maintain their IDCs and all their deductions for 2019. So that's great.
Well, as far as IDC, and this is what very critical to all of us, as long as the well is actually spudded prior to the first 30 days of the year, you get your IDC tied to the year before if you prepay prior to December. So what we will do is fund both the drilling portion prior to December 31st if we're not going to get it started. And that will allow everybody to get the IDC this year.
Just real quick. I mean, just a little bit about your background, Mick, and then Greg, just a snapshot of your background.
Sure.
Graduated Oklahoma State University, May of 1970, went to work for City Service. I worked most all of Oklahoma developmental and exploration wise with them. I got to train under some of the guys that found all this oil up here, and some of them were 80 years old and they still brought them in and mentored us. It was a great training. For that reason, I think it's made it where I had no reason to really leave Oklahoma. But I went to work then as a geologist for Rand Ricks and Jerry Jones in about 82 after Penn Square. And they sold the company. 5 years later, we drilled over 1,000 wells in Oklahoma. And from that, unfortunately, Rand, not too long after that, had a heart attack. But Jerry went on to buy the Dallas Cowboys with that money. And I became independent at that point in time. I've probably drilled in this area 200 wells, probably in the Garvin Grady, probably 80 or 90 wells, something under 100 as an independent. We have found reserves throughout Oklahoma. If you really look at where we concentrate these days, it's Seminole, Hughes, Grady, Garvin, McLean. Those are the reserve places. Those are the high tectonic areas that have a lot of undrilled areas and opportunities. And we have not yet exhausted those for a long time to come. My background has been basically, it's just what Rand Ricks taught me. If you're not turning to the right, you're depleting your reserves. You gotta do that to add reserves. And it's always been my job to find those. And I think that the most important part is once you've got good geological and good operations capability, you need good money partners. And I appreciate everybody staying with us. I think you'd be happy with what the results are. I think you'd be happy with how we operate and how we disseminate information and of course, get division orders out as quick as possible for payment. And I think we're looking for a group of people that will continue to stay with us because we've got a lot of projects to pursue. And what's interesting about these prospects, in my opinion, is after and oil was $100 a barrel, and everybody was wanting in. Today it's 50, but the price of drilling these wells was $1.2 million. Today it's half that. The return on investment is as good or better because the costs are lower and the leases are easier to get. And I think we're going to have a time in which we can have a pretty good run and pretty well drill what we want to. The forced pooling law lets us in there to, I might have a drill site. All I can do is get an acre and everybody else are no fines. But we can pool it and own the unit, clean title with pooling law. And with good investors and good operations, I think we could stay together for a lot of reserve recovery.
Excellent. Greg, snapshot of your background?
Yep. I got out of LSU in '88 with a petroleum engineering degree and started out with Sun Oil that right after I joined became Oryx Energy, working mostly California, conventional on the coast, and then moved into the Midway Sunset heavy oil production. I was an operations engineer for them, doing everything from completions, stimulations, and surface installations. Then moved over to the West Texas area, worked in the Permian Basin for a while with them. From there, I kind of moved on to Gaffney Klein and Associates, and that was sort of an extended run with several companies where I was doing international new ventures, just putting together acquisitions and divestiture programs for projects around the world. Kind of culminated with overseas stint in Kuwait, working for Kufpec, and That ended at 9/11. When that happened in 2001, came back to the States and joined Sampson Resources in 2002 here in Tulsa. Then started doing U.S. new ventures for them in business development and getting more and more into the reservoir engineering side of things, doing reservoir simulation on projects in-house, as well as sort of the exploration team where we were looking for the next resource plays to get Sampson into. I ended up leaving Sampson in 2012 and went and joined with a couple of independents along the way, one based out of Dallas, and then actually one was a startup that we put together with a couple of guys that lasted for about 3 years here in Tulsa. Once that ended is kind of when I formed Stadia Energy with another ex-Sampson geologist, and we started getting into a little gas play down in East Texas in Cherokee County that we had put together. And in the meantime, I had kind of ran into Mick at some conventions, and we started talking and ended up joining up with him to look at some of the prospects he had in hand. And we kind of made an agreement to sort of put our minds together and be able to put these things together in a full light with the geology and the engineering so that we can go out there and get them done.
That's great.
That's where we are today.
Randy's got one question.
Hey, Mick, this is Randy. I just wanted to compliment you on what you talked about as far as operations. I come from a fairly extensive 40-year career in operations and everything. And what you talked about, cementing those wells and how you treat them and things like that, man, that goes a long way to success. People just
well, it's incredibly important because you have no idea the frustration when I sell a deal to another operator and I watch them go do stuff, and they say they're going to listen and they're going to do it and they understand, but then they hire a consultant. You know how this happens I call it out of the Anadarko Basin where horsepower is the answer, if you know what I'm saying. Well, they break your cement job right down. You will not have that happen with me. And operations are important. Once you find it, you want to keep it.
Well, that's it. I mean, the hard part's finding it, but the easy part is actually the operations, but people find a way to mess that up fairly regular.
Oh, so they find 10,000 ways, but it's that local knowledge and having worked in there. And it's not so much what to do. We all know you got to put a hole in the pipe, but it's how you do it and what you do to get that cement job in between. It's incredibly important. And I appreciate you understanding that.
Yeah. Well, like
and our job, believe me, our job working together, if you've got ideas, we're on the phone to collaboration has always been, I think, probably one of my my best assets because there's always newer, better ways to consider, and are they applicable here or not? But, that's how you develop and drill wells faster, complete them better. Because operations make a huge difference about success of that bottom line.
Yeah, I agree. Well, thank you very much. Appreciate it.
Thanks, guys, very much. I appreciate everybody joining us. Craig, thanks so much. I'm sure, Mick, you'll get us that shoot of the log over to Craig.
I'll do that right now. I'll email it down. It'll probably just be a photograph real quick to make it quick. But I appreciate your time, y'all taking the time to visit with us.
Thanks, guys.